Egyptian fighter jets have carried out drone strikes on IS targets in Libya, provoked by killing of 21 Coptic Egyptians. But can Egypt, currently recovering from the effects of the 2011 turmoil, afford an all-out war? That is the question we shall try to answer on Global Business tonight. It's the beginning of another week. Hello and welcome to Global Business. We're bringing you the latest developments on the business front. I am Penina Karibe, live in the Kenyan capital, Nairobi. Wherever you're joining us from, welcome to the show. Also coming up, investors rattled by President Zuma's push to bar foreigners from owning land, and expressing social and economic complexities of the mining industry on canvas. Egyptian jets bombed Islamic State targets in Libya on Monday, a day after the group there released a video showing the beheading of 21 Egyptian Christians, drawing Cairo directly into the conflict across its border. Egypt said the dawn strike hit militant camps, training sites and weapons storage areas in neighboring Libya, where civil conflict has plunged the country into near anarchy and created havens for armed factions. The strikes have evoked sharp reactions among Egyptians, with many supporting President Abdel Fattah al-Sisi's decision to strike IS militant camps. However, some analysts fear Egypt's foray into war against the militants may hurt its economic turnaround project that has been hailed by the International Monetary Fund. Let's get more now from Yasser Hakim, who's live for us in Cairo. So Yasser, how have Egyptian markets reacted to these strikes on IS targets inside Libya?
Well, naturally, there were fears today from investors. The stock exchange went down badly, actually. It lost around 9.24 billion Egyptian pounds. That's like much more than yesterday. The EGX 30 went down by 2.4%. That's huge for the last few months. EGX 70 by 2.03 and EGX 100 by 1.7. And the small and medium-sized enterprises EGX 50 has went down by 2.3. So the markets showed that investors are afraid. Most of the selling was from the foreigners. The buying was from Egyptians and Arab investors. But overall, it's been a bad day for the stock market today in Egypt.
And Yasser, France has said Egypt will order 24 Rafale fighter jets, a naval frigate and other equipment in a deal to be signed in Cairo today, Monday, worth more than $5 billion. Was that deal signed?
Yes, the French defense minister came to Egypt today for a one-day visit. He met with the prime minister, with the president, and with the minister of defense, and they signed the contract. The timing comes coincidentally with what's happening here, and it will be going through. Egypt is ready to receive the batch of arms once they are here. But yes, the deal has gone through today.
So the markets responded negatively, Yasser, to this assault, yet Egypt has been trying to project an image of stability ahead of next month's investment conference. Don't these strikes compromise that very assurance Egypt has been trying to give investors?
Yes, it depends what the long and short-term, medium and long-term plan is. For today, it was one strike. No other strikes happened again. It was one early in the morning, 6 sorties, and they bombed several locations in Derna city, western Libya. Now, Egypt says it will also attack other targets. How big the war will be, or the attacks, will it be dragged into a ground offensive? That's when things will be scary, because it will mean more expenses for the economy that cannot sustain such expenses, more losses, and also more instability, political instability that will keep investors away. We know there's an economic conference coming up in March, like you said. So there has to be stability in the streets and the political sphere in order to attract investments back, badly needed investments, badly needed tourists to come to an area that should be safe. The analysts are saying if Egypt keeps it at only flights and airstrikes and air raids only, maybe things will be fine. and can keep the stability. But if it's a wide campaign, military campaign with ground troops going in and losses on both sides, then this will harm the Egyptian economy.
All right, Yasser Hakim with interesting perspectives from Cairo. Many thanks for joining us. Now, indicators such as growth, investment and productivity have progressed significantly since the early 2000s, leading to a considerable improvement of the economic situation in African countries. Well, more than 800 top African business leaders converged in Geneva, Switzerland in mid-March for the annual African CEO Forum. I asked Amir Ben Yahmed, the president of the forum, what will be the highlights of that event.
We created the forum in 2012 as a private gathering of Africa's top CEO to help them network, also to give a voice to the private sector in its relationship with governments and try to promote a private sector-led growth in Africa. The first edition was dedicated to cover the state of the African private sector. It was in 2012. We have moved on since. In the second edition, we focused on the benchmarking with other emerging markets. And this year, really the focus that we have put is really on the necessity of business reform, especially the ease of doing business, which is going to be one of the main subjects. As you know, if you take the bottom 50 of the doing business index, 36 countries are African, and this is something that has to change.
Amir, doing business in Africa still remains a major concern. Many countries still do not provide a good environment for this. So what needs to be done to improve on this?
This comes from usually, especially in French-speaking Africa, from a culture of public government. And the fact that now a lot of private companies are more and more taking a space in the economy of each country will force government to have discussion with them. The fact that the elections now have to be won mostly fairly put a burden on the government for him to have business results, economic results, have growth. And the only way to have growth is to rely on sound strategic investment, on sound public investment, and on promoting growth within the private sector. So the government will now have to focus on bettering the legal environment, on having sounder fiscal policies, on protecting the right of private sector, on having strategic plans in very targeted industry and helping private sector being leaders in this specific sectors. So I am sure that the next 5 years will definitely be a moment of improvement.
Now, one of the items to be on focus at the forum is the anticipated urban explosion across Africa. What is your take on the opportunities for the private sector, first, to make business out of it, and second, to guide a more organized process of this?
You have used the right word. You have used the word opportunities. Up until now, the main word that we were using were challenges. That's the way we are going to approach this situation. Urban growth is a fact, and we have already seen some of the political power being shifted slowly to cities, because that's where the businesses are starting to boom. That's where the challenges, whether it is in terms of business, of housing, of financing, of environment, is shifting. So all of these challenges, we think we see them as opportunities, and so that's what we are going to discuss at the Africa CEO Forum.
Amir Ben Yahmed, the president of the Africa CEO Forum, speaking to us earlier. Now, Nigeria's inflation rate rose for the second consecutive month to 8.2% in January from 8% the previous month. Food inflation was flat at 9.2% and changed from December. The central bank devalued the naira by 8% in November, with many analysts fearing the downward pressure on the currency in a country that imports almost 80% of what it consumes could stoke inflationary pressures. The latest latest figures suggest those fears have not yet been realized, although price pressure could still feed through later this year. A sharp rise in inflation would be an added headache for President Goodluck Jonathan before a closely fought election in which his record on security, corruption and the economy is under scrutiny. All right, so let's go through the markets, and Kenya's main share index rose for a sixth straight session with the country's sole electricity supplier, Kenya Power, in demand, with investors betting on its growth prospects. The Nairobi Securities Exchange rose 17.61 points, or 0.33%, to close at 5,357.69 points. Still ahead, investors rattled by President Zuma's push to bar foreigners from owning land. And Ethiopia embarks on a multi-million-dollar project to cope with growing traffic at the Bole International Airport.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
You're watching Global Business. Welcome back. The reactions to last week's State of the Nation address by South Africa President Jacob Zuma continue as investors and analysts unpack comments that the president made in terms of foreign land ownership. Angela Kupla reports.
On Sunday, the president addressed some of these issues in an interview on the country's state-owned broadcaster, but it appears that the concerns remain.
I think that what you're seeing in South Africa is a government under incredible political pressure. It is losing support in opinion polls. We can see that. It is losing voter support. It is threatened by growing opposition parties, both on its left and its right flanks. And it's got nothing left to give its supporters. And it's turning now to the most radical and populist of policies.
Sending out a message like this to other investors makes it clear that we say we want their money, we say we want them to come and invest in South Africa, and then we prevent them from investing in this country.
Analysts suggest that foreigners and locals have cause for concern.
What Western diplomats are seeing is exactly what it looks like. A South African government that is acting against their interests, taking the step towards seizing those interests. There's a danger in this too that South Africans say, well, this is directed at foreigners, why should it concern me if they're chasing up our property prices and the like. We have little doubt that in time, the manner in which the South African government's now targeting the investments and property rights of foreigners will be applied to South African citizens.
I don't think only foreigners that own land in South Africa. I think everybody that owns property in South Africa should be concerned, because there's a broad general attack on private property rights.
On a broader political level, there is also anxiety about the country's future constitutional path, an area that investors also consider in their decision-making process.
I think land tenure is really that important. I think more important to a foreign investor is the health of the institutions in a particular country. Now, what I mean with institutions are things like, for example, can you enforce contracts, the independence of the judiciary, the independence of the press, those sort of things are much more important, I think, than something like, for example, can I officially own a piece of land? And without a doubt, South Africa's institutions have been under attack.
We are in a significant degree of trouble, and something did change on Thursday night, and it is now reasonable to consider, to suggest that this might have been a step back for South Africa's democracy from which it might not recover.
The proposed legislation has some way to go still before the bill becomes an act. Part of that process is a public participation process, as well as a debate in both houses of Parliament. Locals and foreigners are going to be watching this process as it unfolds. But as it stands right now, it's unlikely that any long-term investor confidence levels will change because there's no detail available at the moment. I'm Angelo Coppola for CCTV in Johannesburg.
The European Union has unveiled a $270 million aid package to support Zimbabwe's agriculture and health sectors, effectively marking the resumption of direct funding after more than 10 years. Relations between Zimbabwe and the EU turned frosty following the 2002 elections, which foreign observers said were allegedly rigged to hand President Robert Mugabe victory. The bloc then slapped sanctions on Mugabe and members of his inner circle. In recent years, the European bloc has lifted sanctions and travel bans on senior government individuals, but Mugabe remains under targeted EU sanctions, with his wife Grace entailing a travel ban and asset freeze. Despite this, he was elected the African Union chairman last month. The direct government support will also go towards assisting with governance and institution building.
The EU-Zimbabwe partnership has also been tested by domestic and international challenges. It has also gone through ups and downs. But we have gone a long way. And having the privilege of assisting today at the signing ceremony of the 11th EDF National Initiative Programme is, I believe, indisputably a moment of great satisfaction for all of us in this room.
We would really appreciate it if we could have the European Investment Bank back in Zimbabwe. So I'm happy that the European Investment Bank will be having another mission to Zimbabwe this year. Our productive sector needs support to accelerate economic growth and achieve sustainable development.
Ethiopia, one of the first growing economies in Africa, is set to expand its Bole International Airport at an estimated cost of $225 million. This is in a bid to triple the number of passengers it handles. Noel Mokugu with the details.
Bole International Airport on the edge of Addis Ababa is home to Ethiopia Airlines, the largest state-owned national carrier by revenue in Africa. Less than a decade ago, the airport handled only 1 million passengers a year, but that rose to 7 million in 2014. Officials expect the traffic to increase at the rate of 18% per year.
The traffic growth is a passenger is about 20% per year, and air traffic is also increasing by the same rate. The idea behind all this development of air infrastructure, of airport infrastructure, is to develop the touristic center of the country. We have scenic values, we have historical values, we are the cradle of the human race.
The expansion, which began in September last year, is being carried out by Chinese construction company and is expected to be completed by 2018.
As you know, this is a turnkey contract with the CCC, which is a Chinese construction company. Preliminary estimate is $225 million. Finally, we have started with that, but we have expanded a little bit. It may increase very slightly to accommodate that situation.
In 2012, the country's national carrier Ethiopia Airlines made headlines as the second airline in the world after Japan and the first in Africa to take delivery of a Boeing 787 Dreamliner to boost its fleet. The airline aims to be the best in Africa by increasing the number of aircrafts.
Ethiopian Airlines, based on its Vision 2025, is planning to grow the airline in terms of revenue, in terms of passenger, and in every aspect of its performance. So as a result, obviously, it's expected that we'll be ordering additional airplanes. So at this stage, what I can say is that we are still analyzing.
Ethiopia Airlines has been operating for the last 67 years and is the second largest in sub-Saharan Africa after South African Airways. The airline flies 84 destinations in 5 continents and 50 of them are in Africa. Noel Mokugu, CCTV.
A new report by Bain & Company says luxury consumption in China fell last year. The government's anti-graft campaign is seen to be one of the main reasons for the drop. Chris Brown brings us more from Beijing.
Luxury spending has been slowing in China for several years, ever since the government's anti-corruption campaign began. But for the first time in recent years, China's luxury consumption has actually fallen, down 1% last year. The sales dip comes after growth of 7% in 2013 and 2% in 2012. Luxury watches were worst hit, plunging 13% last year. Dennis Wang, who runs this online watch store, says sales of expensive watches have fallen, but cheaper watch sales have grown.
In 2014, we sold more than 100,000 watches, up around 60% from 2013. Most buyers already know what they're looking for and buy it online for less. It also because we sell a wide range of watches with prices from several hundred yuan to hundreds of thousands, so market changes do not affect us much.
But many other retailers are being hit by the changes in China's luxury market. Bruno Lanes, head of consumer goods, retail and luxury for Bain in China, says 2014 was, quote, an extraordinary year, and that he expects 2015 to be very similar.
We saw for the first time a decline in the market, so the market contracted. Three main reasons for this. One is, of course, the continuous impact of the anti-graft. Second is the fact that Chinese consumers buy a lot of luxury products outside China, or now, because it's more convenient, also through Daigou agencies. And third, we found that more and more Chinese are now interested by what we call experiential luxury, which is enjoying good time in spas and resorts and cruises.
With experiences now more important to Chinese, it seems brands need to offer more than just a product to win them over. Grace Brown, CCTV, Beijing.
A look at commodity prices now, when gold rose for a third straight session Monday due to a weaker dollar as a meeting of Eurozone finance ministers on how to proceed with Greece's bailout program got underway. On the physical markets, traders were monitoring buying interest in the world's second biggest gold consumer, China, before the country goes on a week-long holiday from Wednesday for the Lunar New Year. Now, gold jewelry and bars are popular for holiday gift-giving, and trading on the exchange is an indicator of demand. And buying has been robust ahead of the holiday, though some traders said sales were still lower compared with last year. Straight ahead, expressing social and economic complexities of the mining industry on canvas. South Africa's mining industry is considered one of the best in Africa, and art is slowly emerging as a lucrative industry as well. But what happens when you fuse these rather diverse sectors together? Well, that's exactly what a Cape Town mining artist is doing with her artworks. Her pieces delve into the very social, economic and emotional aspects of mining. Travis Andrews with the story.
But I'm not as interested.
A work of art that quite literally incorporates the rich minerals of below Earth onto a textured artwork of a canvas. Renowned Cape Town mining artist Jeanette Unite is just among one of a handful in the world that explore this rather unique form of artistic expression. Having been concerned with mining activities for the past 2 decades, she's collected samples from across 25 countries, from diamond mines to platinum prospectives. They've not only formed the basis for a body of work, but a passion as well.
So what interests me about mining is that from a visual point of view, you have this extraordinary apparatus that is, in terms of modernism, it's the form follows function, it's the engineered, it's actually where our modern worlds are made. But from a material point of view, all materials that are mined are used by artists and any technologies. So I'm fascinated by how mining and our everyday lives are connected. Mining is essentially at the core of every single thing that's produced.
At her studio, she continues to touch up current and existing works. A periodic table is filled with various minerals, metals and oxides she's personally excavated from below the ground. Some of her most telling pieces speak to the very social and economic complexities that the mining industry and the country currently finds itself in, including one she's called The Martyrs.
It's been quite difficult to deal with Marikana. I think that it's one of the most shocking and saddest things that's happened in this country. I think it told us that nothing had changed. And essentially I've used the platinum slag and the platinum powders. I've used some luster, which is you can't see it as shiny. And I've used chrome for the letters to acknowledge the memorial, to acknowledge the people who've died.
The latest collection, titled Law and Ore, explores legislation, geospatial diagrams, and layers of mineral strata. It's a piece of work she's risked life and limb for, while trenching through various mines for materials. Mining artwork usually graces the headquarters of some of the largest mining firms in the world. But here in Cape Town, Jeanette's work is being showcased by a local gallery, and it's begun to appeal to a broader audience.
Well, I'm very impressed that you can use the minerals of the mines to make art out of it. And I'm wondering how she does it. Is it like dangerous to get it or not? Yeah, I'm impressed. I think it's quite a job to get the material and then make beautiful things out of it.
It's bold, it's big, it speaks for itself. I like the part of using the gold, mix the gold with different colors. It looks expensive, it looks like it can fit into any home. It's not just industrial. It's a bit hard feel, but it's not industrial, so you can personalize it for yourself.
Mining art does of course come with inherent risk factors, given the safety aspect of mining itself. But when it's blended so successfully to an artistic form, the rewards itself are just that much greater. That was Andrew, CCTV, Cape Town.
Let's look at the currencies now. In South Africa's rand steadied against the dollar on Monday amid thin volumes, with the U.S. financial markets closed for a holiday. But traders said a slew of data due later in the week could offer direction. At 15:23 GMT, the rand was trading 0.13% firmer at 11.64 to the dollar. Now, just before we go, here's what we're working on for Global Business tomorrow. Kenya's 2014 mobile money use surged to a record $26.1 billion, an increase of about $4 billion from the previous year. This is a new high in the use of technology that has transformed lives in the East African nation. A detailed analysis of these figures. And despite a series of interventions by the Nigeria Central Bank, the country's currency, the naira, continues to weaken against the dollar. Nigeria's economy has been badly hit by falling oil prices, but with prices now picking up gradually, could the economy be about to turn the corner? We shall find out. And that's it on Global Business tonight. To send your feedback to globalbusinessafrica@cctv.com. Visit us on Facebook. Our page is CCTV Africa. Stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thank you for watching.